Can you make money while the market is falling? The answer is yes. There are two very common ways to do it. Let's talk about that. Usually, stocks go up by taking the stairs, and they go down by jumping down the balcony. That is why sometimes you see yourself up for the week or up for the month. Yeah. And in just one day, you're back where you started. No. During a market crash or a market correction, you'll see this guy. And this guy. Money, money, money. In the stock market, there is always someone losing money and someone making money. So where do you want to be? The first and most common way to make money while the market is down is go in shorts. Going short. You can make a lot of money very quick on red days, on red weeks, but it's risky. The short selling concept takes time to digest. Basically, you borrow stocks, you sell them at the highest price you can, and buy them again at a lower price. What? The starting point is that you have no stocks, but the stock you have in your radar is touching the moon, and you believe it's going to fall. You start to hear bad news about the company, the CEO is starting to go crazy, and you think $1,000 per share, it's too much. It's gonna fall. So you click sell or short, and what happens? Your broker is gonna find the stocks you want and they're gonna sell it for you. Now suppose you were right and the stock falls 30%. So now it's at $700 per share. Then you start reading good news, the CEO is not crazy anymore, so you click on cover or buy. Then your broker is gonna buy them again for you at this new super cheap price. They return the stocks to where they borrowed them and you keep the extra money. This whole short thing is awesome. Yes, but there are risks. What happened with GameStop? Sometimes good news related to the business, or sometimes just the media, can push the price of a stock up. A beaten down stock can start moving up against all odds. With GameStop, what happened is that short interest was extremely high, meaning that lots of people with lots of money were betting the stock was going down. So when the price started to move up, the roles changed. If you're a long buyer, the worst thing that could happen, if you're not going on margin, is that the stock goes to zero. That's the limit. And you lose all your investment. That sounds horrible, but wait to hear this. Since the stock can go to the moon with no top, if you're shorting, you can lose more than the amount you started with. And you can get a margin call. Hello? And you can end up owing money to your broker. Remember, when you're shorting the market, if it goes down, good. If it goes up, if shorting a stock is too risky for you, there's another very common way to make money while the market is going down. Did you know you can get paid for owning stocks? Nah. You can buy dividend stocks. These companies that pay dividends, they give part of their income to their shareholders. The thing is that you have to own a lot of shares to get a decent amount in dividends. But you have to start somewhere, right? So a good strategy is to buy solid companies that pay dividends and each year reinvest it in the same company. So you get paid more every year. Usually these stocks don't go to the moon, but they have solid growth. So you get paid for owning them and you can sell the shares when you want. Win-win situation. Remember, I am not a financial advisor, but even if you don't feel ready to short or to buy dividend stocks, it is always good to know all the options available so you can have more options in the future. See you next time.